Hey, welcome back to your Precision Data Analytics channel. This is the second video this evening on McDonald's, stock symbol what? MCD. Of course, if you all know, McDonald's is performance is heavily dependent on consumer preferences, consumer changes, and can have a drastic effect on our plots, as you saw in the previous video, right? So anyway, before we get started, standard disclaimer applies. This video is for educational purposes only. It should not be used to make financial, investment, or trading decisions. So very quickly, according to AI, ARIMA is the winner, but it's a very narrow margin, as you'll see here. Very narrow. What's interesting is the confidence or predictor or price interval is, while the forecast line is almost identical, the confidence interval, or the price interval, is actually much narrower than the ETS and the beta one, so it's kind of interesting. What about 6 months data? Well, as always, 6 months data usually goes a little crazy on us, okay? Remember this number 300. Look at 6 months data. I'm going to go with the 6 months data, I think. That seems to be a little more realistic, all right? But again, it finished up above 300. This is actually predicting a slight increase, and of course leveling off towards the end of April. Of course, as always, keep in mind these forecast methods are not optimized for stock forecasting. Look at our comparison table. The difference, the final difference is 17 points between 6 months and 12 months worth of forecasting data. Comparison, again, kind of crazy, isn't it? Okay. What about the disagreement chart? We can see once again, sometime towards late April was when the biggest margin was between 6 and 12 months. Again, this over here is what, 12 points. Metric, again, you can see the difference. Final metric is 5.6% difference. Forecast began on April 4th, or April 1st. 6 months final, 12 months final. There you have it, your forecast for McDonald's Corporation.